found out my business accountant was embezzling money to fund his gambling addiction. The IRS audit made him wish he'd stuck to poker. Running a small business for 12 years taught me that trust is everything, but sometimes that trust gets shattered in ways you never expect. My company had been growing steadily, and I genuinely believed we were doing well financially until some numbers started looking weird on our quarterly reports. The guy handling our books had been with us for almost 4 years, and I considered him practically family since he'd helped us through some tough periods when we were barely breaking even. Everything started unraveling when I noticed our cash flow wasn't matching what our revenue reports showed. We were supposedly making more money than ever, but somehow our operating account kept running dangerously low every month. Initially, I blamed it on seasonal fluctuations or maybe some delayed payments from clients, but the pattern persisted for 3 consecutive quarters without any reasonable explanation. The first red flag came when I tried to access our business banking portal and discovered the password had been changed without my knowledge. When I called the bank to reset it, they mentioned several large wire transfers that I had no memory of authorizing. My stomach dropped as I realized someone had been moving significant amounts of money without my approval, and there was only one person with that level of access. I spent the next week quietly reviewing every financial document I could get my hands on, cross-referencing bank statements with our internal records. The discrepancies were staggering. Nearly $40,000 had disappeared over the past 18 months through a series of carefully disguised transactions. Some were labeled as vendor payments to companies I'd never heard of, while others were marked as tax prepayments that never reached the appropriate agencies. Rather than confronting him directly, I decided to hire a forensic accountant to dig deeper into our books. What she uncovered was far worse than I'd initially suspected. The embezzlement had been going on for over 2 years, with increasingly sophisticated methods being used to hide the theft. The total amount stolen was closer to $75,000, money that had been systematically siphoned from our business accounts. The forensic accountant explained how he'd been creating fake invoices from shell companies, then transferring money to accounts he controlled. He'd also been manipulating our quarterly tax payments, sending less money to the IRS than what our records showed while pocketing the difference. The scheme was elaborate enough that it might have continued indefinitely if I hadn't started paying closer attention to our cash flow issues. What made the betrayal even more painful was remembering all the times he'd worked late to help us meet deadlines, or how he'd voluntarily taken pay cuts during our lean periods. He'd been stealing from us while simultaneously acting like he was making sacrifices for the company's success. The cognitive dissonance was overwhelming. How could someone who seemed so dedicated be systematically destroying everything we'd built together? The decision to involve law enforcement wasn't easy, but I knew we had to pursue criminal charges to have any hope of recovering the stolen funds. The detective assigned to our case was experienced with white-collar crime and immediately recognized the patterns in our documentation. She explained that financial crimes like this often escalate over time as the perpetrator becomes more confident in their methods and more desperate to fund whatever addiction or lifestyle they're supporting. During the investigation, we learned that he'd been struggling with a severe gambling addiction for years, spending entire weekends at casinos and losing thousands of dollars in online poker games. His personal finances were in complete ruins, multiple maxed-out credit cards, a mortgage that was 3 months behind, and loan sharks who were apparently getting increasingly aggressive about collecting debts. The money he'd stolen from us had been going directly to feed his gambling habit and pay off mounting debts. The most shocking revelation came when we discovered he'd been using our business credit cards for cash advances, then using that money to place bets on sports games and casino websites. He'd been covering these transactions by creating fake expense reports and manipulating our monthly reconciliations. The level of deception was mind-boggling. Every interaction we'd had over the past 2 years had been tainted by his lies and manipulations. Meanwhile, our business was struggling to stay afloat without the money he'd stolen. We had to delay several important projects, cut back on employee benefits, and even consider laying off some staff members. The emotional toll on everyone was devastating. People who had trusted him felt personally betrayed, while others worried about job security if we couldn't recover financially from his theft. The legal proceedings moved slowly, but eventually he was arrested and charged with embezzlement, fraud, and money laundering. His lawyer tried to negotiate a plea deal that would have resulted in minimal jail time, but the prosecutor insisted on pursuing the maximum penalties given the amount involved and the duration of the scheme. The court case became a media circus in our small town, with local newspapers covering every detail of the proceedings. Then came the phone call that changed everything. The IRS had selected our company for a comprehensive audit, triggered by the inconsistencies in our tax filings that his manipulations had created. What should have been a routine review turned into a nightmare when they discovered the fake tax payments and manipulated records he'd been submitting on our behalf. Suddenly, we were facing potential penalties and interest charges that could have bankrupted our entire operation. The IRS audit was relentless and thorough, examining every transaction from the past 5 years with microscopic detail. They questioned every expense, every deduction, and every financial decision we'd made during the period when he was handling our books. The stress of dealing with federal investigators while trying to keep our business running was almost unbearable. I was working 18-hour days trying to reconstruct legitimate records while cooperating with their investigation. What made the situation even more complex was that his gambling addiction had led him to make increasingly desperate decisions toward the end of his scheme. He'd been filing false tax returns on our behalf, claiming deductions for expenses that never occurred and underreporting our actual income to reduce the amount of taxes he thought we owed. These manipulations created a web of lies that took months to untangle with the help of tax attorneys and forensic accountants. The IRS investigation revealed that he'd been using our business as a front for money laundering operations connected to his gambling debts. Some of the shell companies he'd created were actually fronts for illegal gambling operations, and money from our accounts had been flowing through these organizations to pay off his debts to some very dangerous people. The FBI became involved when they realized the scope of the criminal enterprise he'd been participating in, whether knowingly or not. As the investigation deepened, we learned that his gambling addiction had started small but escalated rapidly when he began winning occasionally and thought he could beat the system. He'd convinced himself that he was just borrowing money from our business temporarily and would pay it back when he hit a big win. Of course, that big win never came, and instead, he kept digging deeper into our accounts to cover his losses and pay off increasingly threatening creditors. The psychological evaluation ordered by the court revealed the extent of his addiction and the delusional thinking that had driven his criminal behavior. He genuinely believed he was helping our business by keeping his gambling problems hidden, not realizing that his theft was slowly destroying everything we'd worked to build. The addiction had completely warped his sense of right and wrong, making him capable of betraying people who had trusted him completely. The trial was emotionally exhausting for everyone involved, but the evidence was overwhelming, and he eventually pleaded guilty to all charges. The judge sentenced him to 6 years in federal prison, followed by 5 years of probation during which he would be required to make restitution payments to our business. However, the restitution amount was a fraction of what he'd stolen, and we knew we'd never recover the full amount of our losses. The IRS audit concluded with our business owing additional taxes, penalties, and interest totaling nearly $30,000 due to his manipulations of our tax filings. While this was devastating financially, it could have been much worse if the investigators had determined that we were complicit in his scheme. Fortunately, our cooperation with the investigation and the clear evidence of his deception convinced them that we were victims rather than co-conspirators. Rebuilding our business after the embezzlement required completely restructuring our financial controls and hiring a new accounting firm to handle our books. We implemented multiple layers of oversight and approval processes to prevent anyone from having the level of access that had made his theft possible. The paranoia and mistrust that resulted from his betrayal affected every aspect of our operations for months afterward. The most difficult part of the recovery process was dealing with the emotional aftermath of being betrayed by someone we'd trusted completely. Every new employee or contractor we hired was subjected to extensive background checks and reference verifications. The casual, family-like atmosphere that had characterized our business for years was replaced by formal procedures and constant vigilance that felt foreign and uncomfortable. 6 months after his sentencing, I received a letter from him in prison expressing remorse for his actions and asking for forgiveness. He claimed that gambling addiction had made him lose sight of right and wrong, and that he'd never intended to hurt our business or the people who worked there. While I appreciated his apology, the damage he'd caused couldn't be undone by words, and I wasn't ready to forgive someone who had systematically stolen from us for years. The ripple effects of his embezzlement continued for years after his conviction. Our business credit rating was damaged by the financial instability his theft had caused, making it difficult to secure loans or establish relationships with new vendors. Several longtime clients lost confidence in our ability to manage our finances responsibly, and we lost contracts that had been the foundation of our revenue stream for years. Eventually, we managed to rebuild and even expand our operations, but the experience fundamentally changed how I approach business relationships and financial management. The trust that had been so central to our company culture was replaced by healthy skepticism and robust oversight systems. While this made our operations more secure, it also created a more formal and less personal work environment that some employees found difficult to adjust to. Looking back, I realized that the signs of his gambling addiction were there, if I'd known what to look for. He'd often seemed tired and stressed, had mentioned financial difficulties at home, and had occasionally made comments about needing to hit it big to solve his problems. His behavior had become increasingly erratic in the months before we discovered his theft, but I'd attributed it to work stress rather than recognizing it as a cry for help. The experience taught me that addiction can drive people to betray those closest to them, in ways that seem incomprehensible to those who haven't experienced it. While his gambling addiction didn't excuse his criminal behavior, it helped explain how someone who had seemed genuinely caring and dedicated could systematically steal from people who trusted him. The disease had progressively eroded his moral compass until he was capable of actions that would have been unthinkable to him years earlier. Recovery from financial fraud is a long and difficult process that affects every aspect of a business operation. Beyond the immediate financial losses, there's the damage to relationships, reputation, and the fundamental trust that makes business partnerships possible. Our company survived, but we were forever changed by the experience of having someone we trusted completely use that trust to systematically destroy everything we'd built together. The final twist came 2 years later when I learned that he'd been released early for good behavior and had immediately violated his probation by returning to gambling. He was arrested again within months of his release, this time for stealing from the halfway house where he'd been staying. Apparently, the prison sentence hadn't cured his addiction, and he was back to his old patterns of theft and deception as soon as he had access to money again. This latest arrest made me realize that his apology letter had been just another manipulation, an attempt to make himself feel better about his actions rather than genuine remorse. He was still the same person who had stolen from us, just temporarily prevented from acting on his impulses by the prison walls. The cycle of addiction, crime, and incarceration would likely continue until he found the strength to address his underlying problems honestly. Today, our business is stronger than ever, but the scars from his betrayal remain. We've learned to balance trust with verification, and we've built systems that prevent any single person from having the power to destroy what we've worked so hard to create. The experience was painful, but it ultimately made us more resilient and better prepared for the challenges that come with running a business in an uncertain world.